Stock sectors, transportation stocks, the coronavirus effect. So last week I did a video where I looked at the 20 stocks that were stretched and ready to correct. And that was pretty timely as we were looking at a downturn for the stock market in this coming week. It came, and certainly that has helped a lot of those stocks moving to the downside. So overall, that was pretty good, timed really nicely. And the stock market is in what appears to be a corrective period, triggered by the coronavirus. It's in line with our analysis that we've actually had for some months, based on the time and price levels that we expected the market to peak, and from those levels to turn down into a corrective process that would last for some period of weeks ahead. Now, based on what's going on in the world and the prospects for a slowdown around the world, commodities have gotten hit pretty good. Oil really getting hit very hard as the prospect for a worldwide slowdown pushes that commodity down based on what is a bad supply-demand situation even getting worse. And industrial metals getting hit very hard, copper with a breakdown, and all of those signs that the investors think that, well, the worldwide economies are going to slow. In fact, the news out of some analysts that look at China look for what is already a depressed level of 6% growth rate coming down to maybe a 4% growth rate for China, which is practically a recession. As far as the way growth is gone, they were way over 10% for quite a while, and now slowing. And people are traveling less. China, there's a threat that Macau is going to get shut down, or those casinos shut down. And casino stocks got hit very hard. There are more than 50 million people in quarantine in China, and there are many countries that have reports of this virus spreading into their countries, with people here in the U.S. being monitored. I think there are something like 190 people being quarantined here in the U.S. that may have been exposed to the virus. So there's a slowdown going on, or at least a threat of it in here. And that affects stocks that are the companies that carry products, carry people. They're affected. And we're going to look at that group today, the transportation stocks, and see how that is affecting the group and which of those stocks are really in bad shape. And of course, when there is an influence in the markets moving groups, sometimes the good ones are wrapped up in that. We call that pin action, and that creates opportunities, especially for buyers, as the stocks come down with the groups, but then you end up with good chance to buy stocks that will likely rise again once this crisis of the virus gets by. Even if this turns into a full-fledged pandemic, we know it will end, and that will, of course, bring opportunities. Of course, what is the timing for that? We want to look at that. We want to look at the overall effect of the transportation index on the overall market. We'll look at Dow theory a little for a second and compare where we are in as far as that goes. That's the Dow transportations and their action versus the industrials. And then we're going to look at airlines, rails, truckers, and shippers. We have 13 stocks to review, and we want to look for, again, which ones look like they're going to get hit, which ones look like getting hit are going to bring good opportunities. And what is the overall timing? How long should this last on the downside before the stocks end up capitulating on the downside and give us those opportunities for rebounds, or for some stocks moving to new highs? So that's what we're going to look at here as we look at the transportation index, the coronavirus effect. We're going to start out by looking at a chart of the transports In this case, we're looking at the ETF, the IYT, that's the iShares Transportation Index. And you can see in there our cycle analysis. We always want to give you a little primer when we look at that. These are cycle brackets on the bottom. They tell us the repeating lengths of cycles that are measured from low to low. And you can see that each of these lows or corrective periods in there align with those bottoms or projected bottoms in the cycle brackets. There are 1, 2, 3, 4, 5 completed ones right in here that are all basically perfect. And we have this next one that we're in that you can see is scheduled to bottom early March. So this is what we call a positive configuration or bullish configuration. It has only a few weeks left to go, so it's not likely to break down at this level here. It's more likely to be setting up a very bullish scenario. In other words, if it falls in what looks like another 4 or 5 weeks to the downside, it's likely to set up a reversal that moves back up to this high or more. Now, why do I say that? Well, the probabilities are high that when you get a bullish configuration, you have one right over here where it closed higher than it began, that you will then take out the high of that cycle. In this case, it broke this low, so that says the next cycle will fail in resistance, which it did. This is a neutral cycle. It doesn't tell us very much, though this cycle did turn bullish. So this is a bullish scenario, and we are in a correction in a bullish scenario as we look at this transportation index. Now here's the major peak right over there, and that's actually an important number. But I want to look at it and refer to it now in the Dow Jones Transportation Index. So I'm going to put that one up because that's the one that will be relevant when it comes to Dow theory. So here you can see again, there are those same cycle patterns, but at this time we're looking at them on the Dow Jones Transportation Average. It's got the same pattern in there, you can see that, and that right over here, this extends out to maybe a week or two longer based on what I see in the patterns here, but that calls for about 4, 5, 6 weeks on the downside here. So this is your correction in the stock market during that period right there, and this being a buy zone and then a likely move back to the upside. Now, what we talked about in our longer term projections of the stock market was that we would likely get a decline, we'd get another rally, and then back into the summer or late spring or into the summer, we get another big decline. But we're not projecting that in here yet. We're just looking at this drop that we're in right now and the prospect for another rally after that. And the prospects are very high at this point. We get over this level. The question is, do we get over this level right over here, which would be the Dow theory confirmation of a bull market? There's some level of absurdity in that because there's no doubt we're in a bull market, right? However, if it tries to get up there and then fails again and then takes out the corrective low, then you get a non-confirmation, which we've had several of, and it says that, well, this bull market is suspect at that point. So if you still believe in Dow theory, or if you ever did, then this is what you'd be looking at. The problem with that is that people say that, well, this is a much more modern world and these are antiquated indexes and maybe they don't hold water any longer. Truth be told, we still do transport things, and that's how things get around the world, whether it be by rail or by air, and we have a massive amount or huge percentage of the online retail that comes through that same type of shipping or air or rail. So it's very tied to the current world, and I still believe it's relevant when you look at that. So that is the Dow Jones Transportation Average, and the point we're making for the purpose of this video is that there looks to be another 4 to 6 weeks, we're going to call it, of downside in here before the market turns upward again. That is what we want to focus on now as we look at 13 stocks in the categories. We're going to be looking at all weekly chart patterns, just as this one is right here. And for those of you that do follow our work, we refer to daily and even intraday to fine-tune the type of analysis that we do, along with momentum and swing high, swing low analysis, which are probably the three core parts, or parts of the core of our analysis: cycle analysis, momentum analysis, and support resistance analysis. And we believe that those three parts give you the best way to raise your odds of success as you engage in the markets, no matter what level or what style of trader or investor you are.